Well, I guess if you are the editor of the Gloom, Boom, and Doom Report, this week is tailor-made for you, and Marc Faber says more to come to fit that description. The gloom, or the doom, or the boom, where do we go from here, Marc?
Well, basically, we have a lot of volatility. As you know, over the last 12 months, the S&P rose from 1010 on July 1st, 2010, to a peak of May 2nd of this year, 1370, and then we dropped 4 days ago to 1101, and now we're at 1178. So we have a lot of volatility. I think the market may rebound somewhat more here because we were very oversold, and some technical indicators have turned positive, including also insider buying. But in general, I think it will be extremely difficult for stocks to make a new high, and after this rebound, I think we'll drift lower. It's not to say that we will collapse, because if the S&P dropped to around 1,000 or so, the Fed would certainly pump again money into the system.
Do you think this market, you hear a lot of statisticians, Marcus, say that it's an undervalued market, that even at these levels, the comeback as it did over the last couple of days, still very, very much an undervalued market compared to historical norms. Is that right?
Well, I mean, the concept of valuation is very difficult when you have zero interest rates. I can make a case that actually the price of gold is still undervalued compared to, say, the mid-1980s when it was trading around $400. So it's very difficult to say what is value in this environment. Is a Picasso good value, or is it overvalued? I don't know. But stocks measured by price-earning ratios, and considering that probably the economy will be weakening and that corporate profits may disappoint, may not be quite as cheap as all the strategists claim.
So when you look at Europe, I know it's just sort of macro noise, and they talk about a rescue backup fund or backstop for banks there. How much does that affect your thinking?
Well, basically, it affects my thinking in the way that I believe all the central banks in the whole world will print money, and that eventually we will have symptoms of inflation. They may not necessarily all be in consumer goods prices. They can be manifesting themselves with insurance premiums going up, with transportation going up, energy prices going up, food prices going up, educational costs going up. These are inflation measures also, and the weakening US dollar, as has happened. Now, near term, maybe the US dollar can rebound somewhat, possible, but in the long run, it's simply a doomed currency. That's where the doom comes in.
On that pleasant thought, Marc, I'll leave it there. Thank you. Always good seeing you. Thank you very much for coming, Marc.